It is Wednesday, the 17th of September, and I'm just going to be doing a trade review for this particular trade. I just thought this trade was particularly good, particularly clear with its narrative and quite easy to do, and it made a lot of sense to me. So I just want to go over it and show it in some more detail. This trade over here, this is actually a blow-in account, so it's just a practice account essentially. This was just a random long I took during the London session, which played out to my first take profit. I couldn't be bothered looking at the charts because it was just a combine, so got stopped out. But other than that, just focusing on this trade, it was essentially a short from this internal range buy side targeting the previous day low and the sell side down here, as well as the low of day. So I'm going to jump across to this chart. This is essentially a little diagram of what I was looking at. We had the previous day low engineered after yesterday. That was created exactly at the 700s, or not the 700s, but a big figure level, which is an institutional level. And that gives the idea of a support and resistance kind of idea. We then consolidate above that level all the way into the close. That gives plenty of time of anyone who was looking for a long to buy throughout this range and put their stop loss down there. Overnight session happens, and if you're only looking at regular trading hours, when we open up at 9:30, you'll essentially just see support at this low and then us consolidating above it. So you can imagine people wanting to catch the low that we found support at right at the open, and the idea is that we're likely to attack that previous day low. Now, during the overnight session, it could have done anything. It could have taken out the low multiple times. It could have done something like that, but the idea still stays the same. We're likely to attack that low. And the reason why I really paid attention to it today is because I saw this happen in the past multiple times, and today I anticipated it and was able to trade it. Now, using this same chart, that shouldn't be in the way. So I've got a few lines on here. I'll talk through everything that is on the chart. There isn't too much there, hopefully. I'll just go into this time frame. So this is the 9:30 open, this yellow candle. I just have it colors that way. But the only lines I have is the previous day low. So that is the previous day low. If we go back over here, you can see that we sold off on Tuesday, created a low, and if we put on the price tag at that low, we can see it says 3 ticks below the 500s. So creating the idea of false support and then really high resistance consolidating all the way into the close. There is also reason to be targeting the sell side because we had this rally on Friday. Then on Monday, we continue to rally, closing the day up here, engineering all this sell side for people to put their trailed stops. Then climbing high on Tuesday before coming down, failing to take out those trailed stops, making that low. Now overnight, if we draw forward, you can see that we actually came down and tapped the low. That's where I took that long that I mentioned right there. But then it comes up and it slams down quite aggressively, takes out the previous day low as well as the sell side. However, during the regular trading hours, if we go to RTH, you can see that we still had these smooth lows. So the previous day low at the hundreds level, all these lows below. And so when 9:30 opens up, I'm expecting it to drop down and take out that low. So I'll put it back on ETH. So that's the first line I've got there, the previous day low. I'm going to draw that all the way out here. And because it is actually already been taken overnight, I usually just make it dashed, so that I know at 9:30 that it's just on regular trading hours, we haven't yet taken it out. RTH, that just represents where we closed the regular trading hour session. And then we have midnight on the chart, that represents fair value for the day. So above is a premium, below is a discount. And if we go to the 1 minute chart over here, I've also got 8:30 on the charts, and that also does the same thing as midnight, essentially, representing premium and discount. So ahead of the open, I saw that we had sold off aggressively here. And what happens when we sell off and take out the previous day low? Well, people will probably want to go short and chase the move. If we zoom in a bit, we can look in this range from this high down to this low. We've traded up like this. This looks like a reversal. Everyone will want to buy this. But do we show displacement through these highs? No, we kind of get up there, we kind of fail, work our way back into the range. So that's not a very good sign. If you were bullish, you wouldn't want to see us failing to get above highs and rejecting them. Then drop down into this range, and this also stood out to me. We have a long wick that does an enticing move higher. We then roll over and then make relative equal lows with that wick before climbing back up. So anyone who bought down here, if they need to trail their stop somewhere, it's going to be to here. On top of that, we also have the 1 minute chart disrespecting the midpoint of this wick, as well as the 5 minute charts, sorry, the 15 minute charts, the exact same thing happening. We have the midpoint of this wick being disrespected, and then an immediate reversal that indicates, one, that we're likely to go higher short term, but also that we are leaving relative equal lows. And the long wick also, that's another signature that is often left for when we are trying to get people to trail their stops to that location. And we can see the same thing on the 15, and then especially if we go to the 1 hour chart, that is that same low down here. We left a really long 1 hour wick. So the narrative is really set that we are engineering a lot of sell side below this low. We're then also confirming that on the low time frame with these relative equal lows. And that fits in with my narrative of us attacking the previous day low right at the open. So for this trade, I'm going to need opposing liquidity. And if we look inside this range, I can identify where the opposing liquidity is. When we have an aggressive move in one direction, a lot of the time it will leave impulsive highs that made the move down, such as this high right here, a swing high before an impulsive move. You could also consider this to be one as well, but this one's the main one because it is in a premium, and that is that impulsive swing high that made the move down. So we can draw that out as well. I'll just make that light blue, and I'll go to the 5 minute chart. You can also see that's a really nice 5 minute impulse high. So I'd usually label all that as M5 and just put that at the top. So I know if we do touch these highs, these are the kinds of swing highs that are likely to reject price. So going into the open, I have all this in mind. I also like how ahead of the open we were enticing longs with these rallies higher. And what I want to see at the open is us take some form of buy side and show signs of reversal. At the open, I'm also watching the ES just to see if we do get some sort of a divergence. Now this is the regular trading hour chart, and you can see that is the regular trading hour close right there, and then we open at 9:30 on this candle. And I'm actually going to bring up the 15-second chart as well. So do 15 on this corner, 1 minute here. That is RTH, so good. So right at 9:30 we open up and we immediately rally. That's what I want to see. We are enticing more longs into the market right at the open. And at the same time we are running above this regular trading hour buy side. So we're tripping in longs above these highs. and on the 5 minutes you can see that we're also hitting that 5-minute impulse high. If I bring up ES up here, we can see that ES at the same moment, right at 9:30, ran right above the overnight high, so we immediately have SMT. So SMT on the highs right there. And I'm watching the 15-second chart. Now, we get this initial rally, we already have SMT on the highs, we pull back a bit. I am noting that we do have these smooth highs up here, however, I'm not too worried about them because of the narrative I just mentioned and outlined. We then pull back and get this run back up at 9:31, but then immediately drops straight back down. Now, as we're dropping lower, we bring up ES as well. You can see that also made SMT on the highs. So that's 9:31 and 9:30 making SMT, and the aggressiveness of this drop back down, that indicated this was a likely failure swing. So I trusted getting short right down here at 25.25, I believe, with in fact I'll put so I shorted like that. Using this as the invalidation, the failure swing. It's kind of hard to describe what it looks like in the moment, but the idea of the failure swing is rather than making a higher high, we make a lower high. And when we do that, and then the move away from that lower high is aggressive, such in this case here, we drop quite aggressively lower, then that offers a great place to get in, trusting that that high should be in place. And the SMT on ES confirming that, as you can see just there as well. So following that, so this isn't the highest probability entry technique. I only took it because I had all the narrative behind me, but I'm also trying to work out how I can trade how I can catch moves like this where I have everything's in play right ahead of the open, and there is reason to sell before we shift lower, because that is sometimes the case. And today that was a beautiful example of when it is a good idea to sell before we'd broken through these lows. But the main entry I took, and the one that I'm the most confident in, was based on the 1 minute chart. We'll go back to ETH. So we have a impulse low. So this low that broke the high. I'll get rid of this now. Try and clear this up a wee bit. I'll leave that. RTH don't really need this anymore. And 8:30, we know what that is. So the impulse low that made the high, the manipulation low, we break back below it with this candle and then trade straight back up. Now when we trade straight back up, if we were bullish, you would expect us to not come back down here. And so the idea with this is an impulse rejection failure. So rather than rejecting the impulse low, which we start doing, we then close back below it. That becomes my short entry on that closure with a stop loss above the failure swing high. So essentially exactly like that. And that was where I added to the position, and we get that sell off. And what that looks like on this time frame is we break the low, that impulse low, we begin trading high as if we were rejecting this low and we're about to continue pushing, but then we break back down and close back below. Another thing that makes this really ideal is that this just happens to also be a last second wick. And I'll mark that out as such. LSW M1. So a last second wick, the idea is that when you have a long wick, but the majority of that wick forms in the last 15 seconds of the candle, or the last 25% of whatever candle's duration is, it makes it a high probability rejection. as opposed to a wick that forms at the start of the candle and then it just hovers at the low of it. So that became a really nice entry point. As soon as that candle closed, just getting short right there, or just ahead of it closing actually, and then catching that short down into the previous day low. And if we bring up this chart again, you can see that we had plenty of nice targets. We had the previous day low, which was at the 500s. We had these relatively cool lows down here as well. And then as we drop down into the range, I was watching the midpoint of these two pulls. So from this sell side pull down to the low down here, that is a place that I like to take partials, the midpoint of that. And as we approached the external range, so the actual low, because we had just taken this low and there's quite a gap through here, I was expecting that there was a good chance we could turn around. So I'd scaled the majority of my position out, and at this point I was doing a 2-minute trailing stop, which was stopped out right there. And I can bring that back up on here. So there's that initial entry, and then we break the low, trade back up, get that impulse rejection failure, and I short exactly as we are closing that candle, and immediately we get that nice feedback. Partials, taking some off at 504. So right here, the reason I took them at 504 is I recognized that this was high resistance. This low took out these lows, and this was a deep internal range low just ahead of that, and also just ahead of my target. So it made sense to take some off at 504.75. So there, and then scale majority out as we came into that low. Held one runner, two macros as a runner, one that I took out at the 82s. So the reason I took it out here is because it was below the sell side. It was also an institutional level, which was the 80s. And then I just do a few points above that to make sure I get a fill, because as you can see, we didn't actually touch the 80s just there, and we had this big pullback of a good 17 points. Then holding that runner and getting stopped out as it runs up through here. But overall, really nice trade. And yeah, that's essentially the idea. And I'll go back to the diagram as well, now that we've shown what it kind of looks like. So the previous day low engineers an obvious swing low at a big figure level. Plenty of time spent above it. Really obvious place for people to trail their stops. Overnight, whatever happens. In this case, we tapped the low, rallied, and then took it out. And then ahead of the open, we had done something like that. But waiting for that to happen, and then at the open, anticipating that we are likely to target that previous day low that was engineered at the institutional level, and yeah, catching that move. Now there were a couple of, as I mentioned, I remembered it from something I'd seen in the past. These are some old markups I've done. I mean, I did this, I think, using replay mode, this particular one. Yeah, 2023. So this one was, I was doing some back testing and just noticed that we had the same kind of thing here. We had a sell-off the day before, engineered a really obvious low just above 13k, traded off that level, quite high resistance into the close, so enticing longs. Overnight, it hits the low once, trades back up to this, takes out buy side, and then we start trading lower. Now, as you can see in this case, I was looking for a long, and there were some nice reasons for that. But we open at 9:30 and immediately sell off below that previous day low. And because we had already tripped in the previous day low on this candle here during the overnight session, it's let it melt quite nicely below that level. I was actually looking for a long in this area, so I saw that as we are tripping in breakout shorts below the previous day low and below 13k, and then getting that rally back up. But the main thing is that sell off, obvious low at a big figure level, and then we attack it at the open. And then there's one more example I found from my screenshots. This is a more recent trade that I actually did take, but essentially a previous day low that just happens to be at 22k 900, so exactly at the 900s, and then going into the close we're climbing higher, so enticing longs into the close from a support level at the previous day low. We then open the next day and attack it immediately. And if you look at the overnight session, which is just on this chart on the left, overnight you can see that it actually already attacks that previous day low, climbs back up, spend a bunch of time below it, so already spending a lot of time below that level. But then we open at 930, which is I assume right there, and trade once more below that previous day low. That will do for this video. I'll bring up the big picture once again just so you can see what it looks like once again. But that's, yeah, just wanted to quickly go over it because it did, yeah, I thought it was quite nice. It made a lot of sense to me. I can get a nice picture here. Made a lot of sense. Previous day low, engineered a hundreds level, and then 930 attacking that level, with the rest of the narrative and context of trailed stops and plenty of reason why there should be a lot of liquidity below that low. So hopefully you found that insightful.